Hello, I'm Paul here. Today I'm going to be talking about a continuation to a Walmart stock. And I've already made 3 videos about it. It's kind of a process that I'm doing. I'm trying to compound my way up to certain numbers. And if you saw the first video, you've seen the compound journey you are if you start with $500. But I kind of want to go over the pros and cons of trading between Walmart stock and the S&P 500. They both have their pros and cons. So what I want to look at is which is better, trading Walmart stock, which brings you better results, basically, and which costs the less out of pocket to make the best results. So we're going to look at both. Right now, we want to look at Walmart, and we want to go over the scenario of, if you bought a contract, what can you get out of it? And so when you're looking at Walmart, you basically, from what I've learned, you don't want to make your trades based off of the weekly, which is what I made my mistake on the first time. And you don't want to trade on the daily. You want to basically trade on the hour, and you want to find your signal there on the hour, because you want to ride that out for longer. So what we want to see is what happens over time if you do follow that path of going in there every week, finding. The goal is to find a $1 difference. It's very hard for the stock to go past that, by a week. You don't want to go past $1. You want your $1 to be your goal. So we'll look at Walmart. We'll look at how it compounds, and then we'll talk about the S&P and the kind of the advantages and disadvantages of trading that one. Okay, so we're going to go over this scenario here that you start off with $500 and you bought your contracts and you're trying to find a $1 difference. That if you find a $1 difference, now you're not going to find that per day. You can. The goal of doing Walmart is to find a $1 difference per week. And if you find a $1 difference per week, you will make 25%. 25% of what you're starting with. In this scenario, we're starting here with $500. And I'm not going to really go into this, as you can watch my first video and see what happens. But basically, the first time with the $500, 25% of that 500 is 125. And the goal of this strategy is to take your gains that you just made in the last trade and use it for the next one, and it just compounds it, compound interest. So the first trade with that 500, you will make $125. And then let's just go 10 trades later. Now these are trades, so most likely these are weeks, because you're trying to find a $1 difference every week, because a $1 difference is 25%. So 10 trades later, you're up at about 931. Your capital has grown to $4,656, and your earning is about $931. That's with the work of compounding, because your 25% of the last trade is working for you with your original capital. So that's in 10 trades. So let's real quickly look and see what happens after 30 trades. These are 30 trades. So if you manage to find this twice a week, it'll take 15 weeks. If you do this once a week, it'll take 30 weeks. So keep in mind, these are trades. So if you're able to find this twice a week, this can get reduced down to 15 weeks. If this is once a week, it'll take 30 weeks, 30 trades. So basically, after 30 trades, your capital has grown to $80,779. Now this is if you take your trade, your original 500, you make 25% off that, and then you make 25% off that, and then you go in again with the balance, your full balance, and then you make 25% off that. So you keep reusing all your capital for that 25%. But one thing I want to take note of here is after about 2,000 here, when it goes to 2,000, let's just go here. Whenever your principal is at about 2,000, let's see, right about here, let's just go here. 7 trades later here, working with $2,000 and making 25% is about around $500 a week. So if you can maintain that every week, taking 2,000 and making 25%, you'll make 500 a week. That's most people's jobs. Most people's jobs at that level. So that would only take 8 trades. 8 trades from that 500, 8 trades. So that's just something to take note of. So anyway, that's how it compounds. And the goal with Walmart here is to start off with a little balance, make 25% off that, and then keep making 25% a week. You have to go into the charts. Now you have to go into Walmart and you have to look at it. I recommend doing it on the hourly. And you basically have to find a dollar. So going by what I talked about in my most recent videos here, you can use the linear line regression and you can find those patterns pretty easy. Like right here, if you wrote that out, you got your dollar right there. And if you wrote out, you don't have to write it out for long. You got your dollar right there. So if you use the linear regression candle strategy that I talk about, it's very easy to find when those dollar moves happen. But you do have to wait for it because it's not going to happen all the time. You could find it here. Your dollar happens right here. So you just got to be patient and look at it on the hourly. Use your linear regression candles, and you can usually catch those dollar difference real easy if you use that method. But real quickly, we're going to look at prices. Okay, so say I wanted to predict that Walmart's going to start going up. I want to try and buy these a week out. That would be till July 11th. So every time I buy Walmart, I'm always trying to buy them at least a week out. So we got to look at the prices on how much it would cost for a week out. So what I do is I want to get as close to this dot as possible, but right now we'd be looking at about $465, so that's that $500 I was talking about. Let's see if we can get anything closer. Well, here's 560. This is probably the best bet, but usually about $500 will get you about a week. So it's very simple. All you have to do is, this is one contract, and you want to shoot for that dollar. So in this scenario here, we would have to go to 99. And you get your dollar right there. So that is your 25% right there. So that's all you have to shoot for. And then once you get those gains from the 25%, you take that and you keep on entering Walmart trades for a week. You want to get your week contract, and that's how you make your 25% a week. Slowly over time, though, you're going to want to scale up your contracts in order to have that compounding effect, like we've seen in the compounding chart just a couple moments ago. So, like I was saying with the 2,000, like it was about 2,000. So that's about 4 contracts. So this, you find your dollar. Let's see, we go to 99. Yeah, dollar, about 400, 500 right there. So that's how you benefit from the Walmart stock. So real quickly, let's look at SPY. Now let's real quickly look at what SPY's doing in price. Okay, so what we could tell from SPY is it's in a, I think it just reached all-time highs. We could tell that using the linear regression candle strategy and the 90-95 strategy I've talked about in the last couple videos. We could tell that's in a bullish run, but it may pull back, so you got to be careful of that. So, but we could clearly see it's bullish. So we would want to wait for a pullback and have the candles shoot back up through the linear regression candles. But if you're looking at this, basically, you will want to enter, and you want to enter here, and you can ride this out. And if you're good here, you can, in a day here, you can make $500 if you find the right trade. If you find the right trade in 23 hours, you can make $500, $600. So the same thing that would have taken a week on a Walmart stock, you can find in a day, but it's more risky. Well, I'm going to go why it's more risky to trade SPY than it is Walmart. So if we wanted to look at how much it would cost, now we want to do the same thing. Now we're going to do a week out contract with SPY here. So I think we held it till the 11th. So if we wanted to do one that lasts as long as the Walmart one, and we would want to get in close, we want to get to a good spot. Right about here is about the same where it was with Walmart. So this, for one contract, it'll cost you about $1,390. So it's going to cost you more money to do the same thing with SPY that you would be doing with Walmart. With Walmart, you're waiting it out for a week. It's about $500. With SPY, it's going to cost you a little bit more money to hold it out for as long as you're holding it out for Walmart. And it's also more risky doing it with SPY because anything could happen, because the S&P is connected to the top 500 companies in the world, and if it can go against you, and if it does go against you, we're working with $500 here, and all it has to do is go $5 in the wrong direction, and all your money's gone. It's real risky doing it with SPY because you really have to know what you're doing. You have to really know the patterns and the charts, because if you're wrong, you could end up losing your money faster with SPY than you do with Walmart. So using the linear regression candles and the 90-95, it really helps out a lot. So refer to my last couple of videos. But you really have to understand that when the candle pushes through here, this is a good entry point. It comes down a little bit here, and you re-enter here. This would be a good spot. You could ride that out, and you could be in profit there, but it's going to cost more money. Now, with Walmart, you really have to know that the direction is starting to go. You have to know within that week it's going to start going in that direction, and it's easy to find that dollar, so you can get that dollar difference every week, and you can compound that. And like we said, working with something like $2,000 and making 25% of that will basically get the same kind of, it's a full time. If you can maintain $2,000 with a 25% every single week, you'll make about $500 a week. And for something like that, working with $2,000, making 25% a week to make $500, that's a lot of people's jobs, a lot of people's income they make based off of that. And if you can maintain that, then you don't have to keep compounding it. You can just keep working with $2,000 and trying to make that dollar difference every single week. If you're able to do that, you'll make $500 a week. But you can continue on with the compounding. Now with the S&P, it's a little bit more risky because it's affected more with the market. Walmart's only affected with Walmart and how Walmart does. The S&P is affected because it's the top 500 companies in the world. So depends on really how the economy's doing with the S&P, and anything can affect the S&P basically, and you really have to understand it. It costs more money to work with the S&P. It costs more money to to hold it out longer. So what I personally do is I look for the signals first with the Walmart stock, and then if I don't find it, I'll go to the S&P and look for the signals there. But mainly my focus right now is to basically set and forget it, is to look at Walmart and find the signals, hold it out for a week, and find that dollar difference, because that will compound over time. The results will probably be a lot better over a course of time with doing it with Walmart than it is with the S&P. The S&P is a little bit more risky in my opinion, but it's still worthy that you study up on the patterns of both. Because if you with Walmart here, if you understand the patterns and you understand that it's going to start going up, you only have to find $1 a week with Walmart. With the S&P, anything could happen. But anyway, I just thought I would compare to both. I try to work with Walmart because once I find the signal, I can just basically chill and wait out a week if I want, until I find that dollar. I don't have to be glued to the charts as much when I'm doing a Walmart compared to the S&P. But anyway, if you guys like this video, make sure to hit the like button, hit the subscribe button. I'll see you guys in future videos.